Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hello there, and welcome to the College Investor Audio Show. So glad you're a part of things today. Today we're taking a look at investing on margin and also how to use leverage and not get burned. Imagine that. Let's get right to it. Okay, so investing on margin can present an opportunity for you to grow your portfolio more quickly, but this path is fraught with risk for investors without a game plan. With that risk, investing on margin has gained a bad reputation. However, it is possible to use leverage and not get burned successfully. Let's explore, shall we? First, let's kind of take a look at what investing on margin actually is. Essentially, the margin is money that you can borrow from your investment broker. You can use the funds to purchase an investment. You'll have to take the time to set up a margin account that is connected to your regular brokerage account. Once the margin account is set up, you can use the cash and securities in your regular account as collateral to borrow more funds that you have on hand. The point of investing on margin is to take advantage of potentially high returns. If you anticipate that a particular stock will rise, you may choose to use borrowed funds to buy more stock than you could otherwise. In order to make a profit, the investment must earn a higher rate of return than what is being paid in interest on the loan. With the power to borrow more funds than you have on hand, investing on margin provides an opportunity to amplify your gains. However, this strategy can go south very quickly by amplifying the losses you experience. Eek! So here's how to use leverage without getting burned. So now that you know a little bit more about investing on margin, I know that was just a quick little thing, but the potential downside of investing on margin is pretty clear. However, that doesn't mean it's always a bad idea. In fact, it can provide an opportunity for you to grow your portfolio more quickly. So let's explore some of the strategies you can implement to avoid getting burned. Understand your risk tolerance. First and foremost, you have to do this. Investing on margin, it's not going to be a good choice for everyone. A successful investor that takes advantage of margins will likely have a high risk tolerance and willingness to track their investments closely. If you don't have a high risk tolerance, the potential downsides of investing on margin could be too great for you to stomach. And that's okay. Don't dive into investing on margin if you're uncomfortable with the idea of potentially magnifying your losses. With a higher risk tolerance, you may be more comfortable taking on the risks that come with investing on margin. That comfort level can help you stick to your investment strategy through the inevitable ups and downs. Not sure where your risk tolerance stands? We have some assessments you can take at thecollegeinvestor.com. Learn the ropes on investing first. Building an investment portfolio is an exciting prospect. As you first dive into this new world of money, take things slow. I would not recommend investing on margins until you've gained a solid understanding of how the market works. Without a clear understanding of the market, very easy to lose money with margin investing. If you want some help learning the basics, we've got you covered. Check it at thecollegeinvestor.com. Oh, we have tons of resources there. Now, let's take a look at capping your leverage. If you're chasing down some high returns, it can be tempting to go all in. After all, you believe that a particular stock will rise and net you tremendous profits. However, you shouldn't overuse your leverage opportunities. Just because it's there doesn't mean you have to use it. Although it can be very tempting to use as much leverage as possible, you should set a percentage of your portfolio that you are comfortable with, and then just stick to that. You'll have to decide for yourself where to cap your leverage usage, but many will feel comfortable somewhere between 10% and 25%. With a cap on your leveraged opportunities, you won't have to worry about too much damage being done to your portfolio. It might still hurt if your choice of investment doesn't pan out, but if you have a set limit you're comfortable with, you won't overextend yourself. Be sparing with the margin usage as well. And as I just mentioned, it's good to have a cap in mind when you're pursuing leverage, but you should take things a step further than that too. Don't use margins too often. If investing on margin becomes a regular habit for you, then it can be difficult to stay engaged. Instead, only use margins when you find a worthwhile opportunity. With that, you'll be more likely to stay engaged and disciplined throughout the course of that investment cycle. This will allow you to keep everything on track to the best of your abilities. If you aren't able to commit the time and energy required to monitor your leveraged investments effectively, you might want to hold off on this strategy. Don't forget to account for the margin rate. Even with a lucrative stock opportunity, the interest rate attached to your margin could effectively eliminate any potential gains. With some brokers that charge really high margin rates, it can be almost impossible to find a worthwhile margin opportunity. With high margin rates, you'll likely be forced into a short-term investment mindset. If you prefer a long-term investment strategy, then you may not use leverage as your go-to strategy. Instead, margin investments could be a short-term boon to your long-term investment strategy. Here's the bottom line. This risky strategy is not the right path for a lot of people. The potential for magnified losses and extreme discipline required may create too many obstacles for more hands-off investors. However, investing on margin can be a smart strategy for experienced and disciplined investors. With a cautious approach to use leverage in a sparing way, you may find that the risk is worth the rewards. And that is our show for today. Thanks so much for stopping by. Just a quick overview of investing on margin, but you can find out so much more about it and learning the basics of investing in general at thecollegeinvestor.com. Again, tons of resources there. Thanks again for stopping by. Feel free to share this podcast with somebody who might be interested in it. If it was helpful to you, it might be helpful to somebody else. Thanks again, and we'll talk to you again real soon.